Half people listening can't see him anyway. Let's just say they're all not looking good.
Yeah, let's do this. Let's jump into this Nike article from CNBC. Nike sinks 10% after it slashes sales outlook, unveils a $2 billion in cost cuts. Right? I was reading this article, especially because it had to do with Nike. We're all checks over stripes on this podcast. Except for Haroon. He's rainbows over checks.
It's a very weird swerve for me.
Okay, I respect. You know what? But here's the thing. I respect him for it, though.
I don't.
He's staying true to himself.
I don't
Never
think he is.
changed.
Never changed. That's right. He's always been a rainbow kind of guy. So Nike said it plans to cut $2 billion in costs over the next 3 years. The sneaker giant also cut its revenue outlook for the fiscal year. Nike fell short of Wall Street's sales estimate for the second quarter in a row. So I was reading this article, and there was a lot of things that came up, and I thought, like, I feel like the listeners would appreciate somebody like yourself who's speaking to analysts on Wall Street all the time, and you can kind of explain in bro science what they're trying to say.
Bro science.
Yeah.
Should I be insulted by that?
No, you're capable of both, my friend.
You're capable of sounding stupid.
No,
Yeah.
no, you're capable of breaking it down. So, Odin, can you scroll it down a little bit, please? The article. Thank you. So let's see here. The stock fell about 10% after hours. Nike shares were up 4.7% so far this year through Thursday's close, lagging far behind the S&P 500 gains for the year. Retailer Foot Locker, which has leaned heavily on Nike products, fell about 7% after hours. The first thing when I read this was like, people might be wondering, how does a stock fall after hours? How is that a thing?
Yeah, after hours trading. So just because the market closes doesn't mean you can't trade things. You're just trading after hours, basically in what you think the market will open in at, and you trade things effectively the same way. I mean, there's not a whole lot of difference there. And it gives you a sentiment of what you might expect the next day. So if it's trading down after hours.
So people can actually trade stocks after market closes.
Yes.
Yeah.
You can. And I'm watering down a little bit of the nuance, but effectively, if you log into Yahoo, it'll show you after hours trading activity.
Mm-hmm.
And if it's trending down, you can pretty much expect that it's likely to open down. Now, there's some risk in that. It's kind of like gambling because something comes out news-wise between when the market closes the next day, then, it could trade up. Or there's some other, tertiary economic data which maybe changes the trajectory of the stock.
Mm-hmm.
Basically, what Nike has said here is that, look, we're not hitting our sales targets. And the analysts on Wall Street have made projections of where they think they're going to be, and they're saying we're going to fall short of that.
Right.
We're not going to make as much money as you think we are. And despite what most people think, a publicly traded company is very difficult because the market, the secondary market, Wall Street, people who buy and sell your stock, expect you to do incrementally better every quarter and every year.
Yeah, they don't really care what's going on, right, with everything else.
Run your business, adapt. Okay?
Mm-hmm.
If you're selling less product, raise the prices on the product that you're selling. If you can't do that, cut expenses.
Mm-hmm.
We don't care. Keep the profits up. And keep in mind, a lot of these companies will also pay dividends, which come from the profits that they're taking in.
Right.
So in order for them to declare a dividend and pay it,
right,
they got to have profits. And they got to have profits above their operating expenses and above what they're going to need for retained earnings.
Right.
Earnings are going to keep the company for the war chest, if you will. So, yeah, Nike's saying basically we're selling less than you thought we were, less than the guidance that we've given. And we're going to tell you, hey, expect changes.
Right.
And because of that, secondary, tertiary impacts from that are being felt in the market. Foot Locker being a great example. Foot Locker sells a lot of Nike shoes. Their stock traded down.
Right, and they're also considered an industry leader.
Yeah.
Right? So if Nike's hurting, then you got to start raising your eyebrow to other companies and say,
oh, yeah,
wait a minute, what the hell's going to go on with all these other companies?
Anybody who's publicly traded that has a shoe reseller outlook is probably going to be trading down at the same time because people are going, okay, shit.
Yeah.
If Nike's saying, hey, we're not going to get all of our orders out there, you got to start thinking about everybody else going, okay, they're not going to sell as many either.
Right. All right. So to piggyback on that conversation you just had about guidance, right? They have the finance chief over there, Matthew Friend. What a name.
Yeah, he's balling is what he's doing.
Honestly, this guy was destined for greatness. Friend? Hello, I'm Mr. Friend. Nice to meet you. What the hell? Why wasn't I
Tell me your real name, friend.
Come on, guy.
Wow. Guy, friend, really?
I mean,
you doing that now?
Okay, sorry.
Yeah.
Finance chief Matthew Friend said on a call with analysts, last quarter, as I provided guidance, I highlighted a number of risks in our operating environment.
I said there were problems looming, okay?
I told y'all this was going to happen.
And I told you these bitches were weak.
Including the effects of a stronger U.S. dollar on foreign currency translation, consumer demand over the holiday season, and our second half wholesale order books. Looking forward, the impact of these risks is becoming clearer.
So we told you there's the possibility that there were going to be some impacts to our business on the horizon. We had hoped that that wasn't going to happen, but it appears very clearly to me now that it is going to happen.
Yeah.
So what I'm telling you is we're not going to sell as much shit as you thought we were.
Right. So part of something that I don't think that a lot of people also understand is these analysts.